Wall Street, you may remember, greeted President Trump's appointment of Jerome Powell to head the Fed a year ago with almost universal praise. An experienced Fed governor, Powell was a private equity banker who would understand markets, they thought, and most of all spoke in English, not in economic jargon. A year later, some of that praise has turned to criticism, not the least of which has come from the man who appointed him.
I think the Fed is out of control. I think what they're doing is wrong. I think the Fed is far too stringent, and they're making a mistake, and it's not right.
Maybe not quite so stridently, but others on Wall Street have joined the criticism, pointing to three particular Powell stumbles here. October 3rd, he made the market scared that they were going too far by saying we're a long way from neutral. And then two comments on the balance sheet while the market was concerned about the balance sheet. He said the runoff of the balance sheet is on autopilot, which is a good decision. And then January 10th again says it will be substantially smaller than it is now. In fact, the Fed has now decided it will be bigger. Stanford economics professor John Taylor, who was a candidate for Powell's job, praised Powell generally, but said there is room for improvement.
I think there's something to be said for communicating a little bit better. There was very little mention of the role of the markets. I think things seem too doctrinaire. I think that's being clarified.
Powell's defenders say he's done a good job in very exceptional times. I talked to Bill Dudley, the former New York Fed president, over the weekend. He said, quote, fundamentally, Powell has a harder job than Janet Yellen. During the Yellen period, the economy wasn't at full employment. There was room to grow. Interest rates were very low. Now you're in a more tricky environment. The economy has been surprising because inflation hasn't shown up, not to mention a full employment tax cut and stimulus from the government. Here's the record for Powell. Down 0.2 on unemployment over the year, up 0.2 on inflation, and GDP, the average of this 4 quarters versus the prior, a percentage point higher. So he's doing not that much more in the way of tightening relative to that. The stock market, flat since Powell took office over that time. He has raised interest rates by a percentage point and reduced the balance sheet by $350 billion. So that may be a victory on the market being flat here. And he has pivoted. This is probably the most important thing. He's pivoted policy from gradual increases in the statement before. Now the statement says the Fed will be patient. We will see now if critics go back to praising a patient Powell.